Good evening and welcome to the Australian Stock Market Show. In tonight's show, we look at what we think are the top stocks for mergers and acquisitions. Sonic Health's recent $300 million acquisition has sparked interest in takeovers by investors, and so we decided that we would share our thoughts on mergers and acquisitions in Australia. Importantly, we will share how you can cash in on the opportunities they may present. So stay glued to your screen as we share that and much more with you tonight. Of course, we'll also get into answering your questions and look at your favourite stocks. Hello, I'm Janine Cox, your host for tonight, and joining me is Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham.
Good evening, Ms. Cox. I thought when you said you're doing mergers and acquisitions, I thought we're doing a wedding show. But that's obviously not the case.
You've been watching that show again, or your wife has.
She watches it. Tragic, isn't it?
Oh, really?
Yeah, but we've got a crackerjack show for tonight, haven't we?
We do.
We do.
Big lineup.
So let's not, what do they say? Not
Dilly-dally?
Dilly-dally, or I don't know how to spell that, but let's not dilly-dally and let's get on with it.
Let's do that. All right, my quote for tonight is from American writer Stephen Moore, who said, "The historical evidence shows that shareholders usually greatly benefit from mergers."
An author saying that.
Well, he's a very knowledgeable person.
He's an author. It's like listening to journalists.
Let's get to the point.
Well,
Okay.
I mean, generally, mergers and acquisitions do benefit shareholders.
Economies of scale.
Economies of
For
scale.
mergers and the
Yeah.
acquisitions. Look, I don't always think that the acquisitions benefit shareholders.
Not always, no.
In the short term, that may see a boost, but imagine for some of those buy and hold people that have held shares that they've fallen down to the dark depths, and then all of a sudden they bounce off the bottom and big shark comes along and
Gobbles
swallows them up.
while they're cheap.
And then you and I are sitting there saying, but this is crazy because we can see that this stock could be worth, X times more than that in the next few years if the board just
Do you want me to
continued
get you a soapbox you can stand on and speak to the world?
Well, yes, I'd love that.
Happy to go and get one.
Isn't this my soapbox already?
It is. Voice your opinion. Just tell everybody what you think, Janine, anyway.
Thank you.
But before we move on, Janine, last week we mentioned that if viewers wanted a free copy of my book, then they needed to comment below the YouTube video about their favourite part of the show. Now, the good news is that we picked a winner. And secondly, we'll allow viewers another chance to get a copy of my book.
So, who was the winner?
Okay, can I ask you for a drum roll then, please, for a change? Okay, the winner is Shane. And Shane said, he said, "I really enjoy the RBA segment as it's factual versus what the reporters feed you, which is always negative. It also gives us a good reference point for what is actually being thought." Now, thanks for your comment, Shane. Again, if you do want a copy of my book, you need to watch until the end of our topic tonight and comment on the YouTube video about what part you liked, and then we'll pick the best answer for next week. Now, you'll need to comment in the next 24 hours, and if you are selected, then you'll win a free copy of my first book, How to Beat the Managed Funds by 20%.
This is fun, isn't it? We know that you're sitting there with lots of questions for us tonight, and we have answers to them. So now's the time to send them to us. All you need to do is text 0423 959 846. That is 0423 959 846. So pick up your phone and text us your questions now. Good excuse to be on your phone, isn't it?
It is. Well, while we wait for your I don't know.
Text, that little thing where you press a button.
I had too much chili tonight. While we wait for your text. It's the first Tuesday in the month, and that means we're going to take a look at the Australian stock market. So let's get into the charts. Now, on your screen right now is a chart of the All Ordinaries Index. Now, Janine, you need to take this away because they're bored with me. All
right. Now, I just find this whole formation on the All Ords quite odd.
Yep.
Because it means that, in one sense, this point here could be the end of a move on the market.
Yeah.
But on the other side of that, it could mean that there's another move down to go, couldn't it?
So, yeah, okay. So
So
you're a
really
two-handed economist at the moment?
Yeah, that's right.
Okay.
Right.
What's the other move?
Okay. So
that was the other right, you said.
Yeah, right, yep. So the other thought is that we're just more or less tracking the US market. So this is this line, which is underneath the All Ords, is showing the S&P 500. So I'll just to prove it, there's the little box showing that. just in case you question me.
I don't question you at all.
And we can see
Sometimes
that
I'm mildly concerned.
yeah, we can see that the US market is tapering off a little bit, just as and our market is doing the same thing. So
Yeah.
interesting timing. So it's we're talking about reporting season in the US. We're talking about the budget
Yep.
at the moment in Australia. So there's a lot happening at this time of year. So
And interest rates went up again today by 0.25.
and often what happens when interest rates go up?
No, you
The
tell me.
market just has a bit of a snooze for a while, doesn't it?
Well, that's what we're thinking. I'm still thinking we're probably going to get maybe another week down, something like that. But look, I do think the market's more bullish. I really do.
Look, we'll both really be excited when the market rip-roars through this high here on February 2023. But I think for anybody who's really focused on their portfolio, it's worth watching both what's going on the US market at the same time, like these overlay graphs that we can show them, just to see which one takes off first and are they continuing to work together, because at some point the Australian market, if the materials sector takes off eventually, we should just push right ahead of everything else. That's the theory, isn't it?
But I mean, we also showed people a seasonality chart last week, on the All Ordinaries Index, and we said April's normally a really good month, and whilst April was positive, it wasn't
A boomer.
It wasn't a boomer. Generally, May, June are not necessarily big months, or not. They're not probably some of the worst
And then
months.
July is usually, or August.
July and
can often be
August
good.
is a big boom. And now yesterday I went through the top 10 stocks and showed their seasonality charts, and just to show people the difference between them and what the All Ordinaries Index is doing. But my point is, if April wasn't a big boomer like it should have been, or it normally is, does that mean May and June are going to be more booming?
Well, that has to be held up somewhere in the market.
Yeah.
Eventually it's got to pop, doesn't it?
It's got to pop. So, what I was saying yesterday is I think the market could have one more week down maybe, and then take off again. But I'm agreeing with you, because I think there's still that possibility for another big move down. But hopefully one more week down, maybe 1% down.
July's always interesting too, when the big funds shuffle their portfolios.
You're going to say July is more interesting because it's my birthday.
Actually, I thought I was going to cop a ribbing tonight because Geelong won on the weekend.
And beat your team,
beat
yeah, I
my
know.
team.
I was
waiting
being
for it
nice
and
to
he didn't do
you.
it.
I was
I had
being
to let
nice
him
to
have
you.
that chance, didn't I?
So is that all you've got on the All Ordinaries Index? Let's stay focused.
The old farts won.
We're the premiers.
Okay.
Okay, can we keep
This
moving
is not
on?
the footy show. I wouldn't even want
It
to
is
try
not
to
the
compete.
footy show. Can we actually make some sense and sensibility
All right,
of the
look,
All Ords for people?
So I just think, the first move we need to see is a move above this high of
Okay.
March 2023, and then a rise above this high. We know the market's moving up. If we see a strong move down, I'd be really, I wouldn't be too concerned even if the market took out this low, because it may just need to settle down a little bit towards that 7,200 point mark, but let's just wait and see.
Okay, is that it?
That's it. That's our thoughts on the Australian market. If you want to participate in this show but can't see it live, you can email in your questions ahead of time to info@wealthwithin.com.au. If you love what we do and want to watch the extended version of this show, it will be available on talkingwealth.com shortly after we finish the show tonight. If you're not already a subscriber, you can get a free 7-day trial and see all of tonight's show. Whilst you're there, remember that you can enter the prize draw and win one of our courses, or even get the chance to win $50,000 amongst other great prizes. And we'll conduct the draw next week, so get your entries in quick. Now, let's get into your first email.
All right, now we have an email question from Linda, and Linda says, "Hi Dale and Janine, I'm currently enrolled in your short course in share trading, hoping to go on to the diploma course. I hold a couple of shares, one of them being Mineral Resources, which is the stock code MIN. I purchased for $68 and have set a trailing stop loss of 15% from its weekly high of 92.20 on the 21st of March. Now, stop loss being $78.36. This stop loss was triggered yesterday, or Wednesday the 26th of April, closing at $72.59, which I sold on the opening of trade 27th, or the Thursday the 27th of April, for $71.82. But I'm not sure if I should have waited to see what it closed at the end of the week, seeing as the stop loss was calculated on the weekly chart. Not sure what the rule is. When you set a stop loss from the high of the weekly chart, did I do the right thing? Kind regards, Linda. Good question.
Interesting question and fantastic stock. First of all, congratulations, Linda, on the stock choice. You're absolutely brilliant there. And the timing of the entry was really nice as well. The stock's pulled back. What do you make of the stop loss there?
Well, I mean, she set the stop. I mean, she's going to learn a lot about this. It sounds like she's only really just started the course because, I mean, we teach investors to set, in my book,
if they don't have the knowledge.
If they don't have the knowledge, set a stop loss on a recent high, set 15% below a recent high. We don't ever teach that in the course.
I couldn't quite work out where she was, so I'm wondering whether she needs to just do something with her data. I don't know if our chart looks the same as hers as well, so that might be something worth checking.
But again, to me, she'll learn how to set stop losses properly. She did the right thing in exiting on a stop loss, so that's number one. Regardless of whether it's a weekly or daily or monthly chart, the stop loss is a stop loss. So setting it on a weekly chart is not part of something that needs to be discussed. It's just.
And there are plenty of other rules that would have taken her out of the trade
There
as well.
are plenty of other rules that would have taken you out of trade. Where did she buy it?
So she's bought down here somewhere at 60. This is what I figure around. She said $68.
In Module 3, she's going to learn
place.
rules that would have exited her a long time before the current exit that she has taken, but she didn't take it. So that's the main thing. I think that's the thing, is protecting capital. She's ended up with a profit, which is great. She may not have traded it properly yet, but she's going to learn all that in the course. So. But anyway, I think that's about it. Unless you want to say any more?
I'd say nice stock choice. Great that you've got a plan, and just keep going, and you'll get there.
All right, we do have a question or a text question come on in. So if you do want to ask Janine and I a question, make sure you text the number on the screen your questions. If you are a subscriber to Talking Wealth, we'll be handling more text questions in the second half. But this one is from Liam, and Liam says, "Hi Dale and Janine, could you please check out the DRA Global? Cheers, Liam." So let's go and have a look at DRA Global. That looks crap.
Okay. I don't know what's going on with the share. I'm just trying to work out. I have to go to the DRA Global. I have to go to the daily chart just to see what's going on, and I'll grab this crosshair.
I don't mean to be rude, but that's not a stock we should even be looking at.
Yep. So here's that big bar there. Looks like it's happened here or here. And it's just fallen out of bed. I'm not sure what's going on here.
I don't even know. I'm not even sure what to say about it. It's like, it's so illiquid, it's not funny, and there's lots of places where it really doesn't trade. Yeah,
this is really, you wouldn't want to have a lot of money in that, that's for sure. I wouldn't even want to have any of your money in
I wouldn't have any money in it, actually. So you're looking at, like, that's 500 shares at $2. Multiply 500 by $2. What do you get?
Yeah.
$1,000?
$1,000. And look at the fact that it's actually plummeted.
And that's a week.
It's gone down, 30% or something? Gosh.
It's just, I'm not sure what we can say, because it's not a stock I would have my money anywhere near it, so I don't know.
Yep. I won't make any more comment on that either. It's just very dangerous to be in stocks like that.
All my comments are going to be negative.
Okay.
But anyway.
Try again next time, I'd say. Try another stock, perhaps. We've got another one. We've got a caller. Michelle, fantastic to see a lady on the line. Hi, Dale and Janine. Can you tell me how to develop a rule to protect profits on a share? For example, I bought Cochlear shares at 205. Oh, well done. And it's now close to 260. Do you use the 15% rule as if I have a loss? Love the show. Hugs, Michelle. Thank you so much. Fantastic. Good stock choice.
Well, easy. Setting a stop loss is just, there's initial stop loss and trailing stop loss, and that's what we teach our students.
Yeah, so the initial stop loss she doesn't even have to worry about now. It's more about protecting that profit right now.
Well, yeah, so if they've entered in at 250, so where is it at the moment? I saw 205, was it?
Yeah, down here somewhere.
But we need to protect that. So obviously your initial stop loss, you should have had that already, and you do that as soon as you straight away buy, because you want to make sure you protect any downside move after you buy in case it does fall away. But you do need to set an exit strategy in terms of a trailing type of stop loss. These we talk about in my book. I talk about 15% below your buy price for your initial stop loss. A trailing stop loss is like what we just talked about with the first email where we talked about that one.
Your trend lines are perfect.
For an investor, it's about 15% below the more recent high, or the most major high. doing that sort of stuff, but also trend lines. There's beautiful trailing stop loss we talk about in my book. So if you don't know about trend lines, you might want to get my book. If you go to our website, you can still get my first book for free. You just got to pay for the shipping. So head over to wealthwithin.com.au, you'll be able to get that and just pay the shipping.
It's probably in a little bit of a danger zone right now, given that it's where all these highs are.
It's gone really, really well, hasn't it?
It's gone beautifully, but because it's been up for so many months now, it's more than likely going to come back for a little bit.
Yeah, so again, if you own a stock, you've got to protect your capital, so that's really what you've got to do. So, but I think, Janine, it's time we get into our topic for tonight, which is all about mergers and acquisitions, or M&A as they call it, and how you can profit from them. Now, as normal, we have some top stocks to watch for opportunities arising from these corporate actions.
There's nothing like being able to get in on the ground floor. So if you enjoy making money, and who doesn't, the thought of buying a stock with a high potential for capital growth will excite you. Now, here is where M&As become very interesting. And as regular viewers know, from time to time, I even get on my soapbox about them.
No kidding. You already got on your soapbox about them before.
I even got on the drums tonight as well. You let me play those.
Well, you get on your soapbox all the time, Janine, about mergers and acquisitions, especially with big foreign entities taking over Aussie companies and wiping them off our exchange.
I know.
And I agree with you.
That's frustrating. In order to find top stocks, you really do need to do your research so you can find out what the themes are. Now, on top of that, you need to have the right knowledge so you can read the charts properly. In having these skills, it will amaze you what you can uncover. And that's my advice. Now, it's to get educated, so get started now.
Well, get educated and get started now. Now, we've been saying for some time that the boom is still to come, and when it does, we know that M&As will go wild. Now, the more we go into the highs of a boom, the more M&As we actually see. So how about we just get into it? Yeah.
How about we do that? Well, okay, Dale, let's take a look at some information that I found on Gilbert Tobin's website. Now, they're a team of lawyers who provide advice on matters such as mergers and acquisitions.
Okay, so what do we got?
All right, so it says some key highlights. Now, what we're doing is we're looking at what's happened in 2022 just to get a picture for what's happening in the M&A space. So it says, still 2022 was a very strong year overall for M&A.
That's good.
Deal activity was consistent with pre-pandemic activity levels, and there were 41 transactions announced valued at over 50 million, down from 62 deals announced in 2021, but consistent with the 42 deals in 2020 and equal with the 41 deals in 2019. So aggregate transaction value was actually 45.4 billion in 2022. A third of the unprecedented 130.6 billion deal value announced in 2021, but similar to the aggregate deal values seen in 2017 and 18 at around that 41 to 48.7 billion.
So a lot of companies were seeing a lot of value in other companies and the future to go and do those M&As.
Now you don't get that if we're going into a crunch.
And you don't get that if we're going to a recession environment.
Exactly, that's what I mean.
You really don't. That's
the point.
Big businesses saying, we think there's a lot of opportunities in the coming year, so they're not really worried about the economy.
Yeah, now I know you'll really appreciate what I just shared when you look at this graph. Let's take a look at the summary of M&A activity in Australia in recent years.
Okay, so this is the next graph, isn't it?
Yeah, so this is what we were just talking about.
Still on the same website, Gilbert
but it
and
just
Tobin.
really illustrates, So after even in 2020, the deal activity really maintained what it was doing in 2019, and it shot up. So in times of doom and gloom, this is where you should be buying stuff.
Yeah.
Right. So in 2021, if the big companies and overseas companies are buying during that time, that's what investors should be thinking.
Well, that's in 2021, that's 50% gain on 2020, but is that opportunistic? Well, share prices were low after the COVID pullback.
Sure.
Could that have been opportunity? Possibly. But 2022 being right back to where 41 and 42 here. So 2023...
Well, 2020, think about it, there was the correction to 2020, in early 2020, and then the big recovery that happened after that. Mid-2021, the market went sideways, but it wasn't dire, but everybody was thinking that it was.
Yep.
So why would these mergers and acquisitions happen during that
And
time?
last year was pretty flat.
Because often there are smoke screens going on during that time, and companies are actually, they have a little bit more leeway in taking over other companies.
They do. So let's see what, I'm assuming you're going to tell us what's happening in 2023.
Well, Gilbert and Tobin suggest that the outlook for 2023 is uncertain. The first half's likely to be slower than the second, no surprises there. And in 2022, deals involving foreign bidders accounted for 26 billion, or 58% of all public M&A deals, and Australia continues to be attractive for foreign investment capital. That's really important. The areas to watch are professional services, energy and resources. Well, that's what they're suggesting on their website, but there's a truckload of other things to look for too, isn't there?
Well, yeah, I mean, they're also suggesting that in the transition to the net zero, which the Labor government is really pushing hard with some big targets, which some say are unrealistic targets for reducing Australia's greenhouse gas emissions, and that this will push the continued, or they'll really cause significant disruption to energy and resource companies, and leading to potential activity in mergers and acquisitions on on that front.
Yeah. So we need to think about the themes this year. One in particular, falling inflation, stabilisation of interest rates, and how overall market has been treading water since 2021. We showed you that at the start of the show.
And another resource viewers can look at is the PwC website. And PwC have said that international education and tourism will do well, and that renewables and energy transition will be important. So let's take a look at something else we picked out from their website. So we've got another graphic.
So this is just some text here, which
This is from
I thought this was
PwC?
interesting. Yeah.
Okay.
So paradoxically, deals done during a downturn are often the most successful. These challenging conditions create opportunities for buyers to achieve better returns and even outsized growth.
Sounds awesome to me.
So bigger growth opportunities is basically what it's saying, which is interesting. So, you know, it's a time for investing, isn't it?
Yeah, well, it is. It sounds like it's a really good time for investing anyway. It really does. You know, to me, it's that whole Buffett buying doom, selling boom.
Yeah,
type
that's
thing.
right.
And that really do. People should be looking now and preparing themselves for the next boom. Don't do it while you're in the middle of the boom.
Our research also indicates there are a lot of opportunities in a few other areas. We will get into these after the break.
Okay, now Janine, we saw healthcare company Sonic Healthcare acquire medical laboratory Dusseldorf in Germany, and they paid around 300 million Australian dollars for that, and they are expected to generate revenues of 50 million euro in 2024. With this expectation, Sonic Healthcare's share price shot up significantly in the past few months by around 30%. So can we talk about that one later a little bit? But before you do, how about we look at some of the opportunities? I know you got some stocks for everybody.
Yeah, I thought we'd talk about Sonic after the break, but we've got some really nice little opportunities to look at before we go to the break. So the first one on the screen is actually Life 360, which is a share that we often talk about. Anything in that sort of tech space is going to be important. So keep an eye on some of these different types of stocks. And the important thing is not to think that just because of the size of the company, that's going to mean if they're a big stock.
I've talked about
this is not a huge stock, but even the big stocks, you know, we saw big stocks getting taken over in recent years. So it's important to think that, you know, not to rule those out. And in times where the market does slow down, that's often the time when those bigger ones get picked out for the reasons we mentioned before. So you really like this one, this family sharing tracking app.
I've liked it for quite a while. This is one of my hot tips from about a year or so ago before it took off.
I really like how this is setting up right now.
It is setting up right now. I do like it as well. Yeah, it's a good little stock.
It is interesting. So look, right now, I'd just say, you know, it's one for the watch list anyway. Stocks like this, if you see these sort of things happening where the stock's just sitting in a bit of a consolidating mode, it's just going sideways like this, it's going to break one way or the other, and you just have to be ready for it, don't you?
Oh, well, and that's the thing is you've got to do your research, you've got to have it ready, and then when it does break, you've got to get into it. It's not one that you sort of wait for it to go and then jump into it, if that makes sense.
I mean, have a look at the company, have a look at their earnings, have a look at their cash flow, see what the business looks like.
It's a technology stock, so.
And what the opportunities might be. But it's not just because a company has lots of cash, that could mean that they're in a prime position for taking over, because we're looking at two sides here. We're looking at the fish that could get taken over and
Yeah.
the ones that could be doing the taking over.
Yeah, we're looking at both sides of it.
Because Sonic, it took off like a rocket and it took over that company. It wasn't
Correct.
being taken over, but yet that there was some upside in there because that deal actually was accredited to their bottom line
Well, they
really
always are.
early on.
I mean, I know, Adamos, who I talked about a year or so ago, on my hot tip, and it took off. About 4 or 5 months ago, they invested in a UK company for 20% of that company to add to their suite of products, which they've just launched the product. Now, their share price is CRAP at the moment because they're in a trading hold. But if that product works and takes off, it could be a great stock. And I'm not saying go and buy that stock because you can't at the moment because it's in a trading hold and it's looking really sick. But they're setting themselves up for the future. So you just watch it for eventually it'll start to open up again, it'll start to do well, and then it should take off again. But not right now, it's high risk.
Should we go to the next one?
Yes, we
All
can
right.
do that.
So we've got Macquarie Telecom Group. So
haven't looked at that one for a
telecommunication,
long
cloud
time.
computing, cybersecurity and data centre services. Now,
Prime areas.
prime
Very
areas for takeover at the moment. It's pulled back from its high, so it's actually down. And this is another thing to look at as well, because I have seen a number of good-looking stocks that have great products and services, but they're trading right up to their highs. Now, no one's going to necessarily take over one of these stocks that's so, high in terms of it just continues to trend higher. More than likely, they wait until there's some sort of a pullback in the share price and take that opportunity.
Yeah.
35 or 35.4% down from its high. It's looking interesting. It's consolidating now. If it fell below this low here, I'd be a bit concerned about the direction of it. On the 24th of March 2023, around 56.50, a fall below that could indicate that it's going to continue to decline. But I'd say that there's a short-term trade in it
good.
in them anyway,
looking good.
for someone who's experienced in picking out the right set of rules. But that's just one interesting one. Telecommunications are always good. There's always shuffling going on in industry. I didn't put Telstra in the mix because I don't see Telstra being taken over. That's just something I wouldn't
it's probably
expect.
one going to do the taking over if
More
it's
than
going to do
likely.
it. But yeah, I do like it.
So we've got Ordinate Group. Now, the reason I raised this one is because this was talked about by a number of people in industry. And so what you can do as an individual, if you see someone discussing this is the beauty of the charts, then you can go away and do your analysis on it and decide for yourself whether the actual money is suggesting that it's more likely to rise or fall. Now, at the moment, I'm not seeing like a strong rise in this share. It could shoot up to around that $10 mark, but it's just tracking sideways. So what do you think, Dale? That's my view.
Look, I think it looks interesting at the moment, and you are right. I mean, and often if people go, "Oh, did you hear about blah blah blah?" and they're thinking this is some hot tip. Well, if you got to have tickets on yourself if you're thinking that's special, because if you know about it,
Other people do too.
people in the know have already known about it for weeks and/or months. So if it's now in a chat forum or something else, it's already been out for the big end of town to do whatever they were going to do. And so that's what you're suggesting is the people in the know would have already done what they were going to do before you even hear about it. So if it's not
True.
evident on the chart, it's probably not going to happen too much. And so really when looking at this though, I do like it because it looks like it's not falling away and it's looking really, really sort of solid through here. So, and it's setting itself up, but it's going to break one way or another. The only thing that worries me is volume is dropping off. But if you start seeing a move up onto the upside and
With
volume is increasing,
corresponding.
volume supporting that, then this could do really well because this is in an interesting area as well with
It
this
is.
AV networking. I've looked at some of the stuff they do, very interesting stuff. So I like it.
Yep, it's on the list of one of potential
I think
takeovers, but it's just a
Well,
question
it could
of
be a
the
dark
risk.
horse. I think this
It
one could be a
be.
dark horse, and I do like it. So stay watching this one.
All right, now the next one is Wesfarmers. Now I know this is not necessarily a
big fish.
takeover. This is the big fish, right?
Yeah.
So that's the other side of it. Now, Wesfarmers is just so diverse. It's always been like that. At the moment, home improvement, outdoor living, apparel and general merchandise, office supplies, health, beauty and wellbeing. They actually took over a company not long ago. So beauty, wellbeing, chemicals, energy, fertilisers and industrial and safety products.
What else don't
They've
they
got
do?
lots of cash.
Yeah.
So, there's often when the share prices of stocks like Sonic Healthcare go up, it's because the market thinks great use of that money
Yep.
and there'll be return from that. So
Well, if they've got lots of cash, what does that mean for a company?
well, often the boards are trying to knock on the door saying, do something with that money or give it back.
Yep. So give it back to the shareholders in form of special dividends or capital return, or do something else with it to grow the business.
Yeah, which can be nice as well if they get that.
Which can be nice as well. Yeah, so it's a good position to be into, but that's why you'll see the pressure from the big institutional investors in a company saying, well, you've got a lot of cash, spend it.
Do something, yeah.
Do something with it. So Wes has got a lot of cash, it'll be going on the acquisition trail. So what would you think
Look, we've been
you'd be looking at?
excited about this one for a long time.
Yeah.
However, it's been a bit slow to get going so far.
I do like it.
But it's
a
warming up,
great stock. It is a really good stock.
So that's Wesfarmers. So they're the 4 that we've had.
Yeah.
We need to remind you that you can win a free copy of Dale's book, How to Beat the Managed Funds by 20%. You do this by commenting below this video on YouTube and tell us your favourite part of tonight's show. We will pick the best answer to win the book. So hurry, as you need to comment in the next 24 hours.
Okay. Janine, actually, before we go on, I want to share with everybody, whilst the YouTube people are here, is you and me are going to be presenting for the Australian Technical Analyst Association Thursday of next week here in Melbourne. So if you do want to see Janine and I belly to belly, face to face, and you do want to come, it's going to be, I believe, in Hawthorn. But if you do want to, you need to register with the ATAA. But just shoot us an email through to info@wealthwithin.com.au and we'll get some details out to you. Janine and I, as I said, will be presenting for the Technical Analyst Association, so we'd love to catch up with you. But Janine, I can't wait to see what's next on the show, but we do need to go for a break. But before we do go, for those watching on YouTube, we know that you do have questions and we really do want to answer them, so make sure you email info@wealthwithin.com.au and put Wealth Within Live in the subject line. And if you've not visited talkingwealth.com yet, get over there and take up your 7-day free trial. The big bonus is that whilst you're there, you can watch tonight's show in full. That means a lot of extra time there. We're going to cover a lot more stocks and answer a lot more questions on the show tonight. You can also watch the recordings of the past live shows in full, so you can catch up on what you missed out on previous weeks. Check out the videos from property experts, financial professionals, wealth coaches, trusted experts in business and personal development from Australia and around the globe. So head over to talkingwealth.com right now. You never know, you might just win one of our courses or even $50,000.
Hey, you forgot to mention, Dale, that they can also watch your Australian stock market report, which you do each and every week. And I know this week you covered some really interesting stuff. For talkingwealth.com subscribers, just relax and stay tuned, as we'll be right back after this short break with more stocks and more questions to answer.
When it comes to the stock market, there are 2 metrics that the big end of town follow, which include momentum and volatility. Now, in simple terms, they're looking to identify the direction and the strength of a move as the market changes from equilibrium to disequilibrium. Momentum and volatility arise from periods of disequilibrium. And if we understand this, we can use tools such as the volatility index to provide an indication of the direction and strength of the market. So, how can investors use this information? By studying the VIX, you can identify the sentiment of the market at any given point in time, which means you can avoid making poor decisions while at the same time potentially profiting from this knowledge. This is the volatility index on the top 200 stocks in the Australian market. We can look at this and go, well, what happens when the market's going up or down? So here's the index is fallen low, but you can see it's after the index, the VIX was high in August 2015. So what happens is you get this inverse correlation, and obviously look at that one, that's March 2020. So what happened in March 2020, guys? Volatility rose through the roof because that's the COVID meltdown. This will give you peace of mind knowing when volatility is low, that's unlikely to happen, because volatility means huge price swings, that's what it means. By researching the VIX, it does give investors confidence that if they buy a stock, the market is highly likely to support it.